Good morning, traders. This is Michael coming to you from Game Edge on Friday, August 8th, TGIF. Thank you, everybody, for joining us for our pre-market prep session here at Game Edge. Today, we're going to start with our homepage, gameedge.us. Make sure you check us out online. Join us at X as well as YouTube. Like and subscribe, and you'll be notified anytime we go live and our intraday content we've been posting. Go to our Get Started over here, sign up, and you can join our Discord. Extensive community of varying traders with experience, all the way from new to market makers and money managers and floor traders also. But we have a significant community that likes to help traders get up to speed and become profitable as soon as they can. Also, sign up for our newsletters. We have weekly newsletters here, as well as our free courses, our Game Edge Fast Pass, which is our flagship education course that we put many hours in erecting. And so this gets you up to speed with our thesis, how we look at the SPX options market, how we use our tools, and then another couple courses down here, School of Options, as well as the mental side of trading, all free. Put in your email, and we'll get those on your way to you, as well as joining us here live every morning for pre-market prep, as well as our post-market review. All right, let's get right into it. As always, here at Game Edge, we cover our three pillars: sentiment, structure, and trend. Currently starting with our market trend model, which is based on the tick index. Obviously, we look at the bolded white CT here. This is our cumulative tick, intraday and instantaneous. We're using the tick USC. We have two tick market trend models that we watch. This one is a little bit more noisier, as it includes all the regional exchanges as well as all the other exchanges available for the data. But again, moving to the downside yesterday below our shorter term moving averages that provide us a momentum type look. Again, we saw the filtered cumulative tick, which is our plus 1,000, minus 1,000 block orders below zero. So institutions were selling slightly into yesterday's move down. Breadth indicator, new highs versus new lows. New highs were still outpacing new lows, indicating more stocks were being bought than sold. So today, heading in today, we're coming into the top of the colored ribbon on the USC. We actually cut into the colored ribbon and turned our mechanical portfolio off on the ARCX. I'll show you that in a few minutes. But if you're a bull, you want to see this bolded CT start moving back above the shorter term moving averages, indicating that more stocks are being bought than sold in aggregate, indicating that buyers are coming in and swamping over the sellers. Let's move on to the ARCX. Again, this is what we base our P-Trans to PGEX portfolio on. It's a mechanical portfolio of a selected list of stocks. We posted extensive reviews and back testing we've done, as well as forward testing. Our portfolio significantly outpaces the gains of buy and hold on SPY and SPX. But yesterday we saw it cut into the top of the colored ribbon. This turns our mechanical portfolio off, so we will not be entering any positions today. So again, cautionary stance via the market trend model. Again, we'd like to see this turn back to the upside and obviously emerge over the shorter term moving averages, and then start moving in a linear type fashion as we've previously seen on days this week or the past week. Moving on the SPXA, this is our cruise ship. This contracts obviously don't turn over as rapidly as the SPXP. We separate the SPXA and the SPXP because we believe it's important to understand the structure as well as the positioning of institutions on the longer term, as well as the short dated contracts. I don't believe there's any other service that separates those. So again, this gives us an overall edge in the market, understanding the different positionings and the projected outcomes of this longer dated positioning, as well as versus the short dated positioning. 63.45 obviously remains that line in the sand. 63.50, we'll talk about that. It's a large confluence level. We're above it pre-market, but this is going to be a key area if we pull back to it. You see that transition area there, and to the upside, 64.20. Again, quick takeaway here: call dominated above and below spot price. So again, supportive type action on any pullback within the overall market via the institutions and longer dated contracts. We see the expiration over here that will be important as this expiration comes off. Where this money gets deployed will be key, looking for upside or downside positioning or hedging within the overall structure via institutions. All right, moving on the SPXA for our August monthly OPEX that we're coming into. Again, you'll notice that 63.95, 6400 to the upside, key transition area on the monthly expiry for the SPXAs, and this is a downside 62.85. Our implied open is here. So again, call dominated above and below spot price as we head into the monthly OPEX. Again, pull back to 62.85, 62.90 will be key. We got down towards 6,300 yesterday on that lower level of our drunken sailor range, and then saw a bounce off of that. So levels to the downside, 62.70 also we'll be watching for supportive type action, at least on the SPXAs. Moving on to the SPXP, obviously these are shorter dated contracts, all expiries turned on via our purple tiles. Again, heading into the monthly OPEX, we see expiration for today is 15%. So we'll watch that on the 0DT. You'll notice the total OI here is around 700,000 contracts. So where that money gets deployed for next week will be most importance. Again, transition area 6340. You're really talking about this kind of spongy type area, 6340 to 6350. You'll see that confluence on the 0DTE. So again, utmost importance for the bulls to stay above those areas for speculation to the upside. You see 6,400 is PGEX up here. Really, that's that target to the upside. If we stay above 6,450 and get through 6350, and if we get through 6375, which we'll talk about here in a few minutes. And then staying above, obviously, the bottom of the transition is always an important area to stay in a bullish overall call-dominated positive gamma structure for moves to the upside. Moving on to the SPXP OI change. Again, we've been talking about this day over day, that puts have been outpacing calls. Again, a statement here at Gamma Edge that we always stand by is a well-hedged market does not collapse. So again, shorter dated put speculation to the downside. Can still be supportive in the overall market. It can be speculation for weakness, but usually it's mostly short term, and we'll look at that at the GEX ratio here in just a few minutes, which is a key tool that we watch, again, for shorter term speculation. So again, just a cautionary feather in our cap that puts continue to outpace calls, but again, this can just be short dated speculation to the downside for hedging. Now, if we start seeing a significant change in those overall sentiment and structures where we change from call dominated to put dominated, then that would mean that obviously the in the money puts above us, as well as out of the money puts below us, will start dominating the overall complex. And again, that could be some positioning for further weakness to the downside. But as of now, we have call speculation to the upside, in the money calls below us. Again, just short-term puts coming into the overall market. This is the SPX GEX ratio, SPXP GEX ratio, excuse me, obviously based on the put call ratio, but we add a time component, which is gamma. So this allows us to see the short dated overall structure and positioning. Again, we saw spot price continue to drop and then rebound, but our overall GEX ratio continues to the upside. Again, this is indicating that short dated call gamma is overriding the in the money puts that are overhead. So out of the money call speculation continues to drive price higher and be supportive. So we talked about this short term, or this drop. We were seeing a negative overall slope, quick recovery, but still to the downside positioning. We dropped below 1, indicating that short dated put gamma was dominating the overall complex. And then we said that 0.6 or 0.5 historically has been an area where we can see a bounce. And we started to see that bounce and then a drive back to the upside with a resulting upside movement in the overall GEX ratio. Now, we did see a quick drop down on the 5th. Again, we were discussing that, but we're still staying right above that 1 level. So we were giving an edge to the bulls and the call speculators as we staying above 1, indicating call speculators were still barely in control. And then now you see we saw a pullback, not necessarily a drop with the overall GEX ratio, staying above 1. So again, call speculators maintaining control. We didn't see that large drop to the downside, indicating out of the money put speculation was overriding the complex as well as in the money puts. Now moving back to the upside, positive slope. So again, call speculators maintaining overall control. So again, this GEX ratio really is a key component to watch, as divergence in spot price allows us to see the overall exposure of the SPX structure and position accordingly. Moving on to the SPXP delta balance. So what we're seeing here, obviously this is an interactive chart, as all of our charts here are at Gamma Edge. So you can zoom in and scroll over and see the integrals. This is a key cautionary portion that we're looking at right here. This is the right-hand plane of this green dotted line. This is above spot price. So again, indicating out of the money call speculation or in the money puts above spot price. There's only 2 things that can be occurring above spot price. So again, we're a negative slope on that, indicating that out of the money call speculation is starting to dry up or wane, and the in the money puts above us are overriding the calls. Now below us, the in the money calls, or out of the money puts, in the money calls are dominating. Positive slope here. So again, supportive type action here, not necessarily speculation to the upside. So we're kind of in that area where we can drive to the upside, but our upside may be limited depending on the out of the money call speculation. Now, this can be driven by the intraday volume metrics. That's why we discuss our vol command extensively, seeing how market participants are positioning intraday. If they are positioning to the upside via our vol our vol command, and our vol D command, which allows us to see where those contracts are transacting, then we can move to the upside. But again, it must be a significant amount of speculation above 63.50, above 63.70, again, for us to have that drive to the upside. Delta balance at 1. So again, indicating that call speculators are maintaining the overall control, but kind of a divergence here with the speculation to the upside as well as the speculation to the downside. We like to see both of these in a positive slope, moving to the upside if we're going to have a significant price appreciation possible. So heading into next week, Monday looks decent. Tuesday, short-term weakness may be coming in. We'll continue to watch this as you see the right or the left-hand plane drop. Again, that's out of the money or in the money calls below us, and then you see the out of the money speculation really just maintaining and delta balance just dropping slightly. But we do drop below zero in that left-hand plane. So something to keep an eye on. Again, delta balance really not dropping significantly, but Tuesday next week could be short-term weakness depending on how positioning goes after expiration today. Moving on the SPX P0 DTE. So this is getting into our trading plan for the day. You'll see our drunken sailor range, which was respected very well yesterday, provided our members some excellent opportunities to execute trades, especially the downside here. We had a number of members that took advantage of the downside as we were seeing the market trend model move to the downside, and then we reached that kind of level where we were looking for a possible bounce area into that lower drunken sailor range. Then we got the significant move back to the upside into the afternoon. So again, heading into today, you see our transition levels, confluence really. This is only 5-point strike here. So that would still maintain the overall confluence of the DEX and GEX transition within that kind of sponge supportive area we talk about. So again, staying above 63.50, we'll stay in a more call-dominated positive gamma look. That would move us to the upside as long as we're seeing the call speculation, drive us up towards 63.70. That would be that first area we need to overcome. You see the total OI as well as the net OI. So this net OI column or call OI column, is important as we watch the intraday volume metrics. So you see these number of contracts here. So we need to see at least that number of contracts or more transacting to move us through these levels. And that's why we watch the intraday volume metrics really intently to see if we have enough contracts transacting to move us through these upside levels. Obviously, within the overall transition can be choppy, and that's the drunken sailor range. So we talk about that very low exposure area. Basically, you're just on the ocean without a rudder. You're just getting driven back and forth, again, via intraday volume metrics or intraday market participants where they're transacting. And then to the downside, below transition, we'd look for a little bit more weakness to the bottom of the drunken sailor range, 62.90. And then below that, we'd be net short for a move down towards 62.80 and then possibly below, depending on how the intraday volume metrics as well as the market trend model looks to be transacting. Really not expecting us to drive significantly lower than this today. Coming in call dominated, 700,000 contracts, and we have 10,000 net GEX. So supportive type action, in my eyes, pull back down towards the bottom of transition or even the bottom of drunken sailor range, and that 6,300 to 62.90 to 6,300. Again, key supportive area we've continued to watch really for the past few weeks. So that's the overall trading plan for today. SPXP net stat command. Again, we've talked about these levels, 63.50, those in the money calls, significant left-hand plane integral. As long as we're above that, those will continue to be supportive. And you see the charm out of the money puts there at 63.25. Again, those will continue to grow throughout the day and be supportive as long as we're above that. And you see out of the money calls all the way at 6,400. That would be that charm area growing overhead. If we drive through 63.70, 6,400 would be that stalling area. You see those 63.70 out of the money calls that would become in the money, add that positive delta to the overall complex, and we could move up towards the 6,400 level. And then our key gamma areas, key sensitivity levels areas, obviously 63.50. We've already discussed that. I think we beat that into the ground. And then Vanna, if we do see a drop in volatility, again, opportunity to move to the upside, again, towards that 6,400 level. So that would most likely be the capping area from 6370 up towards 6400 that we'd look for. All right, moving on to the, we already covered that SPXP. Well, so we'll go back to the GameEdge.us. Make sure you're joining us. And check us out at X and YouTube. Sign up and like and subscribe. Again, you'll be notified when we go live. And then our web app this morning, if anybody wants to go over any single stocks, I'd be happy to do that really quickly. We got the web app pulled up. Got about 5 minutes left here. We'll head into the 9:20 hour. So again, thanks for joining us. Hopefully the game plan was clear heading into today. Again, review our content from yesterday. Tesla, yeah, we'll take a look at that. Review our content from yesterday. I posted a bonus shot of our SPX game plan we provided to our members at 8 a.m.-ish yesterday that talked about the 6310 level, the 6350 level, just a deep dive breakdown of how we're going to trade the day. And we have that posted already this morning for our members. So come join us so you can read it. We'll check out Tesla. Yeah, Lilly, I've seen obviously a lot of posts this morning. Looks to be dropping. Tesla still call dominated. Everything looks great with Tesla. We had a few members talking about this morning. 325 to the upside looks to be a key area. We'll look at the trading view scripts this morning really quickly after the update, but staying above transition, just supportive type action. Everything looks good. Call speculation to the upside, all the way up towards 330. That's that largest gradient there I'd look for. Let's look at the structure for today. 325 most likely to be area I'd look for possible stalling, maybe 327.50 and 330. And then if you take out this expiry, invert. And then moving on, you see PGEX moves all the way up to 350 after this expiry. And then obviously we have monthly expiry coming up. But the structure keeps advancing and looks good on Tesla. Again, so any pullback should be supportive on Tesla. Moving into app, I'm not sure if this has enough OI. 445,000, so not bad. Above transition, 450. So we see COI up there at 500. That's the highest call open interest. 450 is PGEX, so that'd be that first upside target area. And then obviously see COTMC way up there at 470. But call dominated, any pullback should be supportive. Speculators look good all the way up to 450 there on app. Yeah, let's take a look at Lilly. So put dominated, obviously, structure speculation to the downside, pretty significant there. You see that NGEX is actually above PGEX. So again, that's an important overall look within the structure. Obviously, this would be negative net OI here via the call and put OI. So again, key area obviously to the upside, 670 there and 657.50. Let's see what the Friday expiry looks like. So call dominated for today. 650 looks like an important area. COTMP 642.50. So if we had any pullback, obviously we'd look for that to be an area of possible monetization. But significant amount of in the money puts overhead, even though we're call dominated. So supportive here, but a large amount of puts overhead still. That these will be in the money as long as we're below those. Those could be a headwind for moving to the upside. Let's see what the expiry looks like for next week. So put dominated heading into monthly expiry, and you see 670 up there and 657.50. So those would be the two areas to the upside. I would not look for a significant amount of move to the upside. And the structure looks pretty broken heading into the monthly OPEX for now. So not something I'd really be speculating on or looking at until after the OPEX. I think that'd be a good time to see where the expiration is. So 25% of the GEX is expiring for monthly. So where that gets positioned will be key, I think. So for me, that's probably what I would be doing, is waiting. MS. So speculate. Minimum's 100,000, obviously, but we like to be the higher the better. That gives us a better grasp of dealer control and overall overall option structure and positioning. So the higher the better. You'll see some of these stocks that are, only have 10,000 OI or something like that, and that's very difficult to get a handle on where the dealer control metrics are as well as the positioning. MSTR, Call dominated above below spot price. Looks like we're pushing right up to that PGEX level at 402.50. But call speculation to the upside looks good. Again, above transition, so that's bullish. So any pullback should be supportive. You see COI down there at 390 below spot price. That's the only thing that's concerning. You want to see COI above spot price, indicating call speculators are speculating higher this expiry. So you see COI up at 420 for this Friday. So obviously call speculation to the upside, 402.50. So I would see us driving up towards 410 maybe, and you see some in the money puts come in there. Not necessarily green all the way up. So that'd be the key areas I'd be watching. And then pull back COTMP 395 and then transition there. CMG, yeah, let's take a look at that one. So put dominated, I think Chipotle. I think they just had earnings, maybe, didn't they, a week ago or something? So put dominated above and below spot price. 43.50 is PGX, so that'd be the first area. You see a significant amount of puts, though. You see this green net delta up and down the chain. So this would need to change very drastically for Chipotle to have any sort of movement to the upside. Put dominated, yeah, significantly put dominated. The ability to move to the upside speculation here would be very low. Expected move is only 1.97%. So really nothing I'd be looking for within an overall trading plan on CMG. So yeah, KL, check out the Game Edge Fast Pass. Everything's in there. All of our key levels are defined, as well as examples of how you can use those. So check out the Fast Pass. That should be included in your onboarding email, as well as your WAP portal. Any one of those. You can go to the hashtag welcome in the Discord, and that will have all the links to our education, get you up to speed really quickly. So yeah. But in the essence, COTMP is where out of the money puts go in the money, basically, and a little more extensive than that, but that's just a simplistic term. And historically, it's an area where you can see some monetization events. So yeah. So yeah. KL, you can also ask in the Discord. You can ask anywhere and tag admin, and we'd be happy to get that. But it should be with the welcome email you received on WAP portal, as well as the welcome channel. All those should be there. So, all right, thanks everybody for joining us. Everybody make it a great Friday. Again, join us at YouTube and X, and come join our Discord. Free trial. You can kick the tires. All the tools turned on. We have open mics on Sunday with the Game Edge team. You can ask any questions you want. We have a technical questions channel where all of our team continues to answer those. We have a chat beta here within our overall web app. Again, you can punch in questions, and this is based on our education library and any of the content that we put on X. So you should get most of your questions answered there, actually pretty quickly. And then if you need any more understanding or explanation, we answer questions live during our open mic on Sunday and record it for all our members. And we also provide one-on-one individual Zoom calls for our members if they need it, included within your overall subscription. So again, we are traders in the trenches, trading our own money, using our tools. So we're not just throwing all this education out and saying, here, figure it out. So, and we post extensive content during the day as we're trading, some of our setups, what we're looking for, and how we're trading. So, all right, thanks everybody. Make it a great Friday, and we'll see you later.